Beginner traders, please be aware. Trading slippage is one of those little nasty things that when you don't know what you don't know, there's no way you actually really know about this. I suppose you could figure it out maybe in a bizarre way. Hopefully now you can figure it out just by this video. But it's not really something that when you're brand new, you're going to necessarily think about. Like I said, I'm not going to say it's impossible to know about it, but let me put it this way. You're not alone if maybe slippage has already bit you, or you totally got caught off guard by it, or maybe you're just, I keep hearing people saying slippage, and oh, the slippage got me. Oh, I got to be careful of trade slippage and any sort of variation. Maybe you've heard that, but I want to address what that is and how it's actually working. But I mean, the how is just kind of an FYI, but what it is at the core is your plan doesn't go according to plan, and there's not much you can do about it. Meaning you plan on, I want to sell here, or I want to exit at that point, or I want to enter at this point, and then you just don't get anywhere close to whatever that value is. So that's what I mean. You set a plan, you have some numbers in mind, which is good. That's great. You're focusing on a trade plan, you're focusing on risk management, hopefully, and all that. But still, when the trade is all said and done, you're looking at the numbers and saying, but that wasn't anywhere really close to what I was thinking I wanted to buy at or be able to sell at or take profit at or any of that. So what exactly, how is this all taking place? Well, just to set up a little story, this is you right here, and your name is going to be Tim, okay? So you are Tim, and you go out there and you buy, I'm going to get real creative here, XYZ, and you buy, just keep the math simple, for $10. So you buy XYZ for $10. And the amount of shares you buy, so you go out there and you purchase 100 shares. So you purchase 100 shares of ticker symbol XYZ for $10. And let's just say that you decide, you know what? I want to sell. I'm ready to sell. And you're saying, you know what? I'm a disciplined trader. I'm a good trader. So to set this up, you buy at 10. And the price goes up to $10.50. And you're saying, okay, that's great. That's great. I want to make this at least a winning trade. So what you're going to do at this point is you move your stop. So you put your stop up at 10.25. Right, so this way at this point, if it pulls back, you're still making 25 cents per share, because for your, like, this is a trading 101 video as you saw at the beginning. So if you bought at 10 and you can still sell it till 10.25, that is a 25 cent per share gain. But what is actually going on? What needs to happen in order for you to sell at 10.25? Well, if the price goes down to that level, you need to have what? You need to have at least people out there willing to buy how many shares at 10.25? If you're saying, well, Clay, you would need to have at least 100 shares available to sell right there. I mean, there would have to be people in the market that want to buy at least 100 shares at 10.25 for you to be able to sell, right? Because for every sell, there needs to be a buyer. Just like for every buy, there needs to be somebody willing to sell at that price. But let's just say that over here, behind the scenes, this is what's going on. So at 10.25, we have a trader here, and they're willing to purchase 25 shares. Then we have down here at 10.20, we have somebody that's willing to purchase 50 shares. And then down here at 10.10, we have somebody else, and they're willing to purchase 100 shares. So what is the actual slippage? Well, again, the slippage all starts off like I started to with the original plan. And the original plan is, well, I want to sell 100 shares at 10.25. That is the plan. But what do we now know about what's going on behind the scenes? Well, in all actuality, at 10.25, there's only 25 shares out there that someone is wanting to buy. So do you see the problem with the math there? You want to sell 100 shares at 10.25, but there's only somebody out there that wants to buy 25. So that means that if the price goes down there, hits your stop, you're going to get 25. So you're going to be able to sell 25 at the 1025 mark. So that person is now gone. But how many shares do you still have left? Well, I mean, not to insult your intelligence, but if you have 100, but you just were able to sell 25, well, now you have 75 shares left. Okay, well now, because I'm assuming you're using a market stop, which would probably be wise, it's going to go down to, well, it's going to find the next available buyer. And the next available buyer, as you said, is at 1020. So how many people or how many shares is this person willing to purchase? Well, 50. Okay, well, it's going to fill you there. Meaning you just now had another 50, which means you have 25 shares left. But this is what is known as slippage. You wanted to get out at 1025, but now all of a sudden you're getting out at 1020. So how much slippage is that? If you're saying, well, that's 5 cents of slippage, correct. You're learning. You're catching on to what slippage is. Slippage is just what you want to get out at versus what you actually get out at. And because this person was hoping to get out at 1025 and they actually got out at 1020, for 50 of those shares, they had to use trading jargon, 5 cents worth of slippage. But we still have the problem, right? That's the worst looking 25 I've ever seen. This person still has, there we go, 25 shares left. Well, okay, well, where's the next buyer at? Well, the next buyer, according to our story, is down there at $10.10. So this person still needs to sell 25. So Tim still needs to sell 25 shares. And we have this person that's willing to buy 100. So hope you're saying, okay, well, that's not a problem at all. This person wants to buy 100 and they only want to sell 25. Absolutely. So at this point, the remaining shares would be sold at what price? If you're saying, well, they would be sold at $10.10. Absolutely. The last 25 shares would be sold for $10.10. So my question becomes to you, how much slippage occurred for those last 25 shares? If you're saying, well, Clay, he wanted to sell at 1025, he got out at 1010, that means for the final 25 shares, he had 15 cents of slippage. Absolutely. Now, when you combine that all together and look at the math, his average exit point is going to be below 1025 because of that slippage that occurred. So the point here being, just because on your level twos, just because you see certain stock prices, doesn't mean that you're actually going to be able to get out at whatever price you see. Now, how is slippage, different from stock to stock? There's a lot of attributes that go into that. But the more volatile a stock is, as a general rule of thumb, the more slippage you can expect. I mean, if a stock is just flying all over the place and you think you're going to be able to nail an exit point or nail, some sort of stop loss, odds are it's not going to happen. Now, you could say, well, Clay, I want to use a stop limit. And you can do that, but of course that carries the risk of, well, what happens if it just keeps going down, and then you never get out at all? So I'm not saying that slippage per se is a bad thing. I'm just saying you need to be aware of it because you can have a fantastic looking trade plan. You can think that everything makes sense with risk relative to reward. But if you're not factoring in the potential and possibility of slippage, well, then you can have some nasty final results, or not necessarily nasty, that's probably not the right word. You can have some very different final results than what you had originally planned for. But this is trading slippage. This is how slippage works, how it's calculated. So when you hear somebody say, oh man, I just had like 25 cents of slippage, that's what happened. And that's what was going on behind the scenes that caused that to happen. So if you do have any other questions or comments, leave those down below. Hopefully I've explained this, but if you have any, like I said, additional questions, I'd be more than happy to try to answer them or at least point you in the right direction. Also, if you just enjoyed this video as a whole, make sure to hit that like button. And then finally, check out the channel, especially if you're new, if you're a beginner. There's a whole playlist of trading 101 videos where I go over some of these basic concepts that when you're new and just getting started, like I said, you may not even have any idea to even consider. And this is, I would say, one of them. So check out that playlist and hopefully you decide to ultimately hit that subscribe button and become a subscriber to the channel. But thank you for hanging out. Thank you for hopefully letting me explain this topic to you. And like I said, let me know if you have any questions below. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.